Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about KEYMED Biosciences Inc. Annual Report. KEYMED Biosciences Inc., a biotechnology company based in mainland China, specializes in developing biological therapies for various diseases. The company has a diverse portfolio of products in different stages of clinical trials. One of its lead product candidates is CM310, which is being developed to treat several autoimmune and oncology-related conditions such as atopic dermatitis, chronic rhinosinusitis with nasal polyposis, seasonal allergic rhinitis, prurigo nodularis, and respiratory-related indications. The company is also working on other products, including CM901, a Claudin 18.2 antibody-drug conjugate for treating gastric and solid tumors, CM326, a recombinant humanized monoclonal antibody for the treatment of CRSwNP and asthma, and CM355, a CD20xCD3 bispecific antibody for the treatment of lymphoma. In addition to these products, KEYMED Biosciences is also developing treatments for other conditions such as Alzheimer's disease, CM383, moderate to severe atopic dermatitis, asthma, and chronic obstructive pulmonary disease, CM512, relapsed or refractory multiple myeloma, RRMM, CM336 and CM380, solid tumors, CM350 and CM518 done, and tumors, CM369. The company has a license agreement with several other biotechnology companies, including Bolinos Biosciences, Inc., Platina Medicines Limited, Prolium Biosciences, Inc., and Timberline Therapeutics, Inc. KEYMED Biosciences was founded in 2016 and is headquartered in Chengdu, the People's Republic of China. The company's product pipeline includes CM310, treatment for atopic dermatitis, chronic rhinosinusitis with nasal polyposis, seasonal allergic rhinitis, prurigo nodularis, and respiratory-related indications, CM901. Claudin 18.2 antibody drug conjugate for treating gastric and solid tumors, CM326. Recombinant humanized monoclonal antibody for the treatment of CRSwNP and asthma, CM355. CD20xCD3 bispecific antibody for the treatment of lymphoma, CM383. Humanized monoclonal antibody for the treatment of Alzheimer's disease, CM512. Treatment for moderate to severe atopic dermatitis, asthma, and chronic obstructive pulmonary disease, CM336. BCMA-xCD3 bispecific antibody for the treatment of relapsed or refractory multiple myeloma, RRMM, CM350. GPC3-xCD3 bispecific antibody for the treatment of solid tumors, CM369. Anti-CC motif chemokine receptor 8 monoclonal antibody for the treatment of tumors, CM518 done. Antibody drug conjugate for the treatment of solid tumors, CM380. GPRC5D-xCD3 bispecific antibody for the treatment of RRMM. KEYMED Biosciences Inc. market capitalization of $18 billion is materially smaller than most of its industry peers of roughly $26 billion. KEYMED Biosciences Inc. trades at a higher price-to-book ratio of 4.93 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The company maintains a moderate leverage profile, with liabilities making up 34% of total assets, suggesting a balanced approach between risk management and capital efficiency. Liabilities have increased, while assets and equity have failed to keep pace or declined. This suggests the business is not growing and may be in decline, making it a highly unattractive investment from a risk perspective. Shareholder equity has weakened over the past 5 years, accompanied by declining or negative operating income. This suggests the business may be eroding shareholder value and warrants caution. The company has consistently reduced its share count while revenue has grown, but declining assets and equity suggest buybacks may be taking precedence over reinvestment. The income statement shows that the company have been growing its revenue annually, but the operating income have not been increasing. This shows that the business is under pressure with rising cost. The primary drivers of revenue growth for a pharmaceutical company are multifaceted and varied. One key driver is the approval of new drug applications, such as KEYMED's inclusion in multiple indications on the National Reimbursement Drug List of China. This not only increases sales, but also provides a significant upfront payment from Gilead Sciences' acquisition. Another major contributor to revenue growth is the commercialization of existing drugs and the development of new ones. The company has successfully launched 12 clinical-stage drug candidates, which have contributed significantly to its revenue. Additionally, collaborations with third parties through joint ventures or out-licensing arrangements have also played a crucial role in driving revenue growth. The company's strategic partnerships, such as co-development, collaboration, and licensing agreements, have also been instrumental in boosting revenue. For instance, the upfront payment of $675 million from Gilead Sciences' acquisition and potential milestone payments of up to $500 million have significantly contributed to the company's revenue growth. Furthermore, the inclusion of KEYMED on the National Reimbursement Drug List of China has led to a significant increase in sales. The company's research breakthroughs, such as the publication of positive study results in Nature Medicine, have also generated substantial revenue through tiered royalties on net sales. In contrast, the primary driver of revenue decline is the decrease in collaboration revenue relating to R&D support services on CM901. This has resulted in a significant drop in revenue from RMB 56,138,000 in 2024 to RMB 474,000 in 2025. The company's operating cash flow is a topic of interest in its financial statements. On the surface, it appears that the company is generating negative operating cash flow, as stated on page 22. The net cash flow used in operating activities for both 2024 and 2025 was significant, with RMB 712 million and RMB 790 million respectively. However, a closer look at an alternative calculation provided on page 32 reveals a different story. According to this calculation, the company actually generated positive operating cash flows of RMB 603,799 in 2025 and RMB 155,377 in 2024. This discrepancy highlights the importance of carefully reviewing financial statements and considering multiple perspectives when assessing a company's performance. In conclusion, based on the alternative calculation provided, it appears that the company is indeed generating positive operating cash flow, contradicting the initial assessment of negative cash flow. The company's debt level and interest expenses have undergone significant changes over the past year. A notable increase in total debt is observed, rising by RMB 151,256 from RMB 1,291,354 to RMB 1,442,610. This surge in liabilities suggests a substantial shift in the company's financial position. However, a closer examination of interest-bearing bank borrowings reveals an initial increase followed by a decrease. The amount rose from RMB 472,371 in 2024 to RMB 509,369 in 2025, before dropping to RMB 258,030 in 2025. Despite this fluctuation, the company's interest expenses on bank borrowings have actually increased, rising from RMB 17,790 in 2024 to RMB 18,900 in 2025. This indicates that even though the amount of debt may have decreased, the cost of servicing it has continued to rise. Management is optimistic about the company's future prospects, citing a positive outlook with increased net cash flows from financing activities. To support this growth, the company plans to expand its manufacturing capacity to meet rising production demands for its drug candidates. This expansion will be focused on advancing the commercialization of KEYMED and its pipeline products in China and globally. In preparation for future growth, management is also considering hedging significant foreign currency exposure, if necessary. This proactive approach demonstrates a commitment to mitigating potential risks and ensuring the company's continued success. Overall, management statements convey a sense of confidence and strategic planning, positioning the company for long-term growth and expansion. There is no notable activity in terms of acquisitions or divestitures. The company has not engaged in any significant transactions involving the purchase or sale of assets or businesses during this period. This suggests a stable and conservative approach to business operations, with a focus on maintaining existing resources and capabilities rather than expanding through external means. The company's financial policies have been scrutinized in recent reports. One notable aspect is the absence of dividend payments. According to available information, the company has not paid dividends to its shareholders. This decision may be attributed to various factors, such as prioritizing reinvestment in the business or maintaining a cash reserve. Furthermore, there is no mention of share buybacks in the provided documentation. This suggests that the company has chosen not to repurchase shares from the market, which could have implications for shareholder value and the company's capital structure. That concludes the financial summary for KEYMED Biosciences, Inc. Feel free to comment below, and I will be happy to answer them when possible.